Well, I'd like to welcome everyone to our Zoom at noon. We have really family friends. You're almost really part of Rothman, the SKC group, extraordinary accountants and just great people. Again, I'm Dale Caldwell. I'm the executive director of the Rothman Institute of Innovation and Entrepreneurship at Fairleigh Dickinson University and the Silverman College. And our focus areas are everything from family businesses to veteran businesses to student businesses, and we've started something called Entrepreneur Zones, so urban businesses. And the whole idea is to really support, advocate, train folks in those areas. And so we put this session on to really provide technical insights from folks who are experts in their fields that can be very useful as you're running a business, starting a business, advising a business. And so we're so excited. We've had SKC on a few times, and so we're happy to be here. So with Sarah and Andrea, I always like to begin, say a little bit about your background and how'd you get into this great profession? So whoever wants to start.
I'll kick it off and then I'll tee it over to Andrea. So good afternoon, everybody. My name is Sarah Krom and I'm the managing partner of SKC and Co CPAs. We were talking just before we started a little bit about college students, and I was a college student who very much went into college knowing that I wanted to be in business. Mm-hmm. And I originally was an international business major until I met with my counselor and he told me I needed to take 4 years of a language for international business at that particular school. And I said, well, let's talk about what other options there are, because I had just come off of 5 years of Spanish in high school and I was not looking forward to going back to that. So long story short, he said that the foundation of all business is really accounting. So I might as well, pick that as a major, which I did. So I stayed with it, didn't change after that, and knew very much from some auditing professors that I had that I wanted to be in public accounting, and have done that ever since I graduated. And I came to SKC as my second actual firm that I've worked with, and I've been here since 2010. What is so amazing about where I started and where I think the firm is going and what it's evolved into and continues to evolve into is really, our favorite tagline that we're changing the face of accounting. And so we're not an audit firm. We work predominantly with entrepreneur business owners, and we are much more strategic and consultative in the work that we do. Certainly, we have to do tax returns for compliance reasons, and we back that up with tax planning twice a year. But we talk about goal setting. We talk about the level of growth that they want to see in their business and how to take them there and get them there. We have monthly meetings with them to hold them accountable to the goals and the tasks that we help develop together. But everything is the foundation of the numbers and making sure that those are what they, accurate and where they need to be. And then we build on that with strategy and consultation to get them to the growth levels that they want.
Wonderful. Wonderful. Andrea.
Hi, y'all. Andrea Diaz, Sarah Krom's partner. And she did such a great introduction for the business. I don't think I need to even add to that. That was wonderful, Sarah.
Thanks.
Just a little of my background. I started more in the financial industry. I always say I grew up at Merrill Lynch in the early 20s, and then transitioned to accounting and started the public accounting in the early to mid 2000 or about 2008. So got out of the financial industry just as it was starting to take a downturn. But I've been in public accounting since then, since 2008, and I've been at SKC since 2016, and happy to be here today.
Well, we're very excited to have you. I mean, there's just so much information that we could probably use a few hours. So first, again, one of the first things is, and you always say it's important to know the numbers. A lot of people shy away from the numbers. They're scared of the numbers, but the numbers mean everything. So talk about that a little bit.
So again, I'll go back to changing the face of accounting, right? And historically, people look at accountants when they need a financial statement. And so, maybe we come in the first quarter and your accountant is doing your financial statement for the year. And you're now 3 months maybe from when that time frame was, if you're closing at 12/31, and all of that information is old. It's historical. Right. We can't do anything about it. We can't change it in any way. So we take a different approach at SKC, and I think, the data analytics really allows us to do that, where we try to look at things as real time as we possibly can, so we can make actual decisions based on current numbers. So it's much more of a proactive look at the numbers, as opposed to a reactive look when, we're in March and we're looking at the prior year and we're saying, well, our profit was down, our gross profit was down, whatever it may be. How do we fix that? Well, you can't do anything, retroactively. So anything that
Right.
you're doing, you're already sort of behind that 8 ball if you're looking at that kind of historical reporting.
Wonderful. And I don't know if Andrea, if you wanted to add anything to that.
Yeah, I mean, history is a good starting place, but we don't want to live there.
Right.
Right. We want to learn from potential mistakes. We do always want to look at it, but we want to make sure that we're taking what we've learned from those, down revenue times or low profit margins, and plan for the future on how we don't repeat those same quarters, months, quarters, years.
Well, one of the things that I think is special about your firm is that you'll work with entrepreneurs and really help to empower them to be proactive, so that they know what they need to do. They know what what they need to get. And so share some. We're out, knock on wood. We're hopefully completely going to get out of this COVID world, but things are there. So tell us some stories about what's gone on over COVID with some of your clients. What have you learned? What have they learned? And what advice do you have for the audience?
So I'll start, and then I know Andrea has some good stories of client situations. And I can just say generally that no one could have predicted that, right? You could have all of the best analytics in the world, and you could have these algorithms doing modeling. No one could have predicted shutdowns and all of what came with that. So, the ones who survived and the ones who did better than survive, in some cases thrived through this downturn and through the situation of COVID, were able to do so because they knew their numbers and they knew they were accurate, and they could make decisions because they had some sort of experience already with being forward looking. And we did a lot. And I know Andrea actually created our first model of a cash flow projection around COVID, because clients wanted to know, what was my run rate? When was I going to run out of cash? If, we needed to have these models so that if, 10% of cash started to come in the door and that was it, what was it going to look like? And how is that going to play out for them? So, she really got us into sort of that forward looking with that first model that she built.
Mm-hmm.
And I'll also add, nobody could predict it. And we love the entrepreneur's hunch. It is meaningful. It does matter. We don't want anybody to make financial decisions based on it alone. But there is something to be said for the financial hunch. But the ones who also thrived, they knew their numbers, but they also had solid balance sheets. We always tried to prepare for something, even if that something never occurs. We don't ever want to be so dollar to dollar or strapped tight that we can't, within a few weeks time frame, change course and move in a different direction to make sure that our cash flow that we don't run out of cash. So even though we could never predict it, we certainly are always prepared for a what if. What if it's not COVID next time? What if we lose our largest client? What if we lose one of our biggest revenue generating employees? What if we, what if? Right. There are a lot of what ifs out there, and that does impact the numbers. So we can see, at least if we prepare to have processes in place and regularly monthly review of what we have compared to where we want to be. And if things change course, what decisions do we want to make while we are of sound mind and not in a stressful, heightened time where we feel like we have to make a decision or else something's going to happen tomorrow. We want to make planning decisions before those decisions have to be made.
Right. And again, I know I worked with a number of clients who made decisions during the pandemic that that really weren't numbers based. It was feel based. The people said, well, I'm not going to have takeout restaurants. I'm not going to have takeout because this thing will blow over and they're out of business now. They didn't understand the impact, the financial impact of that. And so, so key, one of the things you're really big on are key performance indicators. What are the key performance indicators? Everybody on this call who has a business needs to know what they are. So share some thoughts about that.
So yeah, I mean, we know what gets measured is what matters, and that's
Right.
how we move that needle. And so we did prepare a couple of slides to share with everybody. Andrea, you kind of started just a moment ago talking about having solid balance sheets. So do you want me to do the screen share and we can talk about, you want to talk about some of the balance sheet?
And I try to be, try to represent the person on the call who may not know anything about this and may be too shy. So what's a balance sheet? So let's
That's a great question,
what is
Dale.
a balance sheet?
That's right.
Everybody knows. Yeah.
Well, we have, so everybody knows what revenue is, right?
Right.
You're a business owner. Revenue is easy, and most business owners look at their profit and loss, revenue minus expenses, to see or feel how they're doing in business. The balance sheet, Dale, that's where all the magic happens. That's the real health of your business. So our balance sheet provides us with how much cash do we have, how much debt do we have, how much equity do we have in the company, how much. And one of the first slides that Sarah's going to show you, or first KPIs, is about working capital. So if we had to, how much liquidity do we have? It helps us make decisions about, if I'm going to make an investment, should I finance it with debt or should I pay for it with cash? If I'm going to increase my inventory this year to ramp up for next year, what's the best way to do that? Can I do that? Am I able to do that? Those answers aren't in the P&L. Right. Those answers are all in the balance sheet. Yes. Very simply, the balance sheet is simply the balance of all your accounts, right? But it provides us with a lot of indicators that tell us the health about our business.
Excellent.
So I will share our first dashboard, and it's a little overwhelming. Some people are visual learners, some people are not. But this is how we lay them out. I'll kind of talk generally about how we lay them out, and then I'll let Andrea talk about the details of what each one means and what it shows, and essentially what's good and what's bad, right? So we like to look at, as Andrea said, history is important, but we don't want to live there. So we look at things 3-year trends. You can see here, this is by month as well. So we are showing here the current ratio, but all of what you're going to see for the next 3 different key performance indicators all talks about what has happened over the last 3 years by month.
So as I mentioned, we want to make sure that we have enough liquidity, and the current ratio is really a liquidity indicator. How much do we have in assets as compared to our current assets as compared to our current liabilities? So what are current assets? Our current assets are our cash, our accounts receivable, our inventory, what can easily be turned into cash. And our current liabilities are the same, anything due to be paid within the next year. So this is a real-time ratio of your liquidity. The goal is to be higher than 1.5, close to 2. That's at 2 is a very healthy number. Nobody's nobody's concerned. When we start getting below 1.5, 1.25, and every business and industry is a little different. But generally we want to be we want to hit that 2 target.
Andrea, let me ask you, so as I look at this, so the 2020, now why did it go up in July, August in 2020?
Oh, grants, PPP.
The PPP, that's why.
PPP,
okay,
there was floods of money coming in everywhere.
Okay.
And this is a scenario that's just this isn't a real client, right? This is just information, but it is representative of that time frame where we did get an influx. Most businesses got an influx of cash. So influx of cash, didn't have to pay it back, so there is no liability.
Right. The one thing that I'll say, so we're working with these entrepreneur zones and the small business development centers, but a lot of small businesses, and it's important if you're a small business out there, didn't have the documentation necessary to apply for those. So a lot of the EDA was telling me that hundreds of businesses didn't know their registration papers. And so one of the things we're working to help them document, digitize that, put it on the internet so you don't, on the website so you don't lose it. So I always say that to folks whenever I see this, is that if you don't know your documentation, you're going to miss out with some opportunities. So anyway, sorry to.
No, you're right. Keeping your documentation is important.
Yep.
Debt to equity is another key indicator, and this is how much debt do you have compared to the equity in your company. We measure this for multiple different reasons. One, we want to make sure that our liabilities are low compared to the equity we have in our company. You know, we generally want to be below 1. Banks also look at this. So if you know that you want to, or your line of credit is renewing, or you want to apply for a line of credit or apply for a loan to expand, you want a new location, you need a line of credit to, as we discussed before, buy additional inventory or whatever. We need to look at your indicators to know what the bank is going to look for to approve you for that financing. But also, again, back to general health of your company. Who are the companies that made it through an unexpected hard time? They didn't have a significant amount of debt as it related to the equity in their company.
And so talk to, because there are those on the call, I'm sure, that, you hear now that, banks will only lend to people that don't need the money.
Well, we've said that for a while, that the time, and we go through this with our clients, the time to apply for a line of credit, if you will, is not when you need it. It's when you don't need it, because, the whole concept is the banks want there to be collateral and the strong possibility of repayment of that debt, whether it's a term loan because you're buying equipment or it's a line of credit. And a lot of that is driven by your industry, right? So if you're buying equipment or machinery, let's say, and you're going to go to the bank for a term loan, well, that asset that you're buying, that machinery, that equipment, is going to be collateral for that loan, right? If you're a professional services firm and you don't have, hard fixed assets like that, they may tie it to your receivables or a percentage of your receivables. So you need to understand what those numbers are before you can go to the bank to ask for those things. And Andrea mentioned before that the banks will look at all of these key performance indicators, and they're actually going to, in some cases, have covenants for your loan. So you need to, as the business owner, continue to monitor this, because your bank is going to potentially call your loan if you fall below or in violation of any of your covenants when you enter into that loan agreement with them.
Well, one of the things, so I do a stream TV show called Family Business World. We talk to a lot of these family businesses, some 100 years old, but if they've been around 50 years or more, I ask them, well, how'd you get started? And they'll say, well, I came over from Italy and I got a character loan. And, these character loans have gone the way of the dodo bird, but that was such an important way to really fuel businesses. But now you can't do that. The numbers have to be perfect, and it's okay to take some risks. So I'm hoping someday, and we're advocating someday, that maybe government restrictions will let up a little bit and they'll take a little more of a chance with folks, but
the SBA. Oh, sorry, go ahead, Sarah.
No, I was going to mention the SBA, but I'll let you do that. I think the most important part as a business owner as well is to have a good relationship with your banker,
right?
Because so much can be done based on relationships, and it's not just someone getting your file and making sure that you check the boxes that are on the inside cover of your file. And very often clients come to us and they may bank with a very large, significant, well-known bank, but they don't have any human contact there except the customer service line that they may sometimes or never need to call. So there's no one-on-one relationship, and there's no capability of kind of thinking outside of the box or having somebody on the banking relationship side that really understands your business, so that they can get a little creative. And I don't mean creative in a bad way, but they can get creative with a package they can put together for you.
Yeah, it's Andrea, you wanted to add to that?
No, we've seen a lot of businesses that have gone through the SBA. You know, they do offer certain loans for minority-owned businesses, woman-owned businesses, veteran-owned businesses, small businesses. So we have seen, yes, sometimes going through the traditional route of a traditional bank to get a loan or a line of credit. They will make decisions sometimes just based on numbers, again, if you don't have the relationship and they don't understand your business. But we have seen the SBA provide for some. There's also a significant amount of grants for small business owners. You know, different corporations. Morgan Stanley offers entrepreneurial grants. Some, again, are tailored towards minority-owned, women-owned, veteran-owned businesses. The NJEDA has put some grants available in for certain different industries for growth capability. So there are resources. I think sometimes it's finding those resources or knowing where to look to be able to get the information on those resources.
Well, I think that's brilliant. You know, Tim Sullivan has been on this show a while ago, and Tim gets it. I mean, he's the head of the New Jersey Economic Development Authority, and so they really have done more for putting out money than really any other EDA that I know of. But it's tough. But you still, I've just been amazed at how many small and family businesses don't know any bankers. They've never, you know, you've got to go interview the bankers. The bankers want to meet you. They really want to, and so really interview and learn from them and develop that relationship. And during the pandemic, so many had absolutely no relationship at all. And, you know, and it really hurt them.
Absolutely. Having a banker understand the vision of your business is extremely helpful when you're, you know, numbers can show one item, but if they understand truly where you've come and where you're going from a visionary perspective, as Sarah said, they can help you put together a package that would work for you. Maybe it won't work for you forever, but it may work for you for the next 12 months to get you to the next hurdle. And then, okay, let's rework that package and get you to the next hurdle. And they're really a partner with you.
Mm-hmm. Well, and one of the things that you learn from school, like, you know, when you're in a course, you want to hear what the evaluation criteria are. When you know, if you want to get an A, you've got to write this paper, you've got to do that. And so by sitting with the bankers, they can tell you their evaluation criteria. Well, you need to reduce your debt. You need to increase your revenue. You need to, you know, I mean, those are the kinds of things you want to, you know, you really want to know, you know, what are you going to measure? And so give me a year, give me some time, and then you work towards that measurement. But it's amazing. So many businesses, I'm too busy, I don't have time to do that. You don't have time not to do that, you know,
Right.
and to really think about that. And these numbers are things you have to be comfortable with.
And we do have one more balance sheet account metric that we look at.
Yeah.
And this is a different way to look at liquidity. It's your working capital. It's your current assets less your current liabilities. So instead of looking at it as a ratio, which current ratio is your current assets divided by your current liabilities, this is the dollar amount of liquidity that you have. So we typically have a target, and it ranges depending on your business, depending on your industry. It's it could be very specific to you. But current assets less your current liabilities is how much working capital do you have to be able to reinvest into the company? How much, you know, what resources do you have to either build, invest, buy a new entity, or it could potentially just be, you know, working up to additional profitability for owners. You know, it doesn't, it's whatever the goals are of the business. And that's how that's how typically we structure these dashboards / graphs is really based on, you know, we have a clear understanding of the industry for our client, as well as what does the client want to achieve. So in this instance, we may be building up this working capital like this because they want to buy a building. So we have a target working capital number because we know commercial real estate requires 30% down. So there are all different rationales of why we may keep, why we may have such high working capital. Could just be we need it as the business grows, right? The numbers tell a story, and it can tell a very different story depending on your goals. So if our goal is, this may look like a wonderful story. Oh my gosh, your working capital has increased from 936,000 in January 2020 to 4.5 million in August of 2022. That's a success story. That's huge. That's great. That's one story. If we were trying to get to 10 million by August of September because we wanted to purchase the building to be able to expand in a new location, and that was going to be able to provide us with XYZ, that's a different story. That's it also means a different strategic plan. It means a different conversation on, okay, how do we get that? Where are we now, and where do we want to go in the future? Is that still feasible, that new location? Or is that just now a 2023 event?
Right.
And Andrea, you said goals, which is such a great way to tie it in. If you'll notice, as we've gone through the last few slides, there are a couple boxes down in the data section that are highlighted in red. And that's because, to Andrea's point, these are all customized by client, and we talk about their story every month. So we know if it's in red, it's out of the scope of what we're trying to achieve, right? So in this case, it probably looks like their goal is at least to have $1 million in working capital on any given month, since we're highlighting the elements that are below that. But that's what's part of the story that Andrea is talking about, is every client is going to look different, because we're having these word conversations beyond just the numbers. It can't just be the numbers on a page that, you know, are meaningful to that individual business and business owner.
Excellent. Now you also talked about the numbers by salesperson or by professional or by, talk about that.
We do. Before we get to that, if I could just show a couple of profit and loss graphs and metrics that we look at, and that'll kind of close out the basic metrics that any business owner should really be looking at. So this is the gross profit percentage. And to go back, this comes off of your profit and loss, your income statement, not the balance sheet. And as Andrea said, everybody knows what revenue is. So this starts with revenue. And then it takes our costs of generating that revenue, right? Our cost of goods sold. And when you subtract that from your revenue, you get your gross profit. And this gross profit percentage is what percentage of your total billings is left over after your costs. And again, same thing, we're trending it over 3 years by month. We have a target that we've focused on. You can see historically what this particular story tells, what the client's trying to accomplish. I mean, clearly something happened in December of 2021 when they were far, as at their lowest trough. But this is another key one that we look at to make sure that the costs that are necessary to generate the revenue are not getting out of line or not getting out of whack. And we've seen a lot of movement since COVID and really predominantly in 2022, when a lot of inflation and market issues, are hitting the economy, with costs just going up for clients, materials, things like that, if you're in that type of industry. And it's just, it's really been eating into their gross profit number, ultimately their bottom line, but they can't churn and charge that back to their clients fast enough, it seems.
Yeah, and these things, what I like about them is they tell a good story about your business. So you look at, in 2022 and 2021, August seems to be their profit percentage. So whatever business this is, somehow August is key. So you really want to look at that, and it helps you develop your strategy. And so the numbers aren't just, they really tell a story. And, the more comfortable you get with it, the more you start to really see a story about your business that can really help you become more profitable.
And I've seen situations looking at these graphs before with clients where the business owner will look at it and say, there's no way that can be right. Why is that showing the way that it is? And then we bring in the bookkeeper or whoever else is on the financial team internally, and you come to find out, well, we didn't get billing out on time that month. And so, the numbers are just not right. They're skewed because something in the process went wrong. And that's something that the business owner may never ultimately know unless we start looking at things like this and digging in and digging in. And that kind of dovetails into what Andrea was saying with the business owner's hunch. And he, knowing that can't be right. Something is wrong with that, result. And then finding out that, yes, lo and behold, something did happen that caused that number to be the way that it was.
Yeah, that's a great point.
And then
Good.
the last one we just have on the profit and loss metrics is our net income percentage. And that's basically the bottom line. A lot of people are very focused on this because they always want to understand the tax impact to them. At the end of the day, after all the expenses are put up against the revenue, what's left over? What am I paying to Uncle Sam versus what can I take myself as the business owner? And again, we're tracking this every single month so that we know, do we need to make different decisions today? Do we need to make different decisions for the next quarter because of what's happening, with the net income comparative to what either our goals are or historically what we've done as a company.
And that's an important thing too, goals. So many people don't really think about, setting these particular goals in these different areas. So maybe say a little more about that. I know you get all your clients to say, well, what's your goal? What are you working towards?
Sometimes they ask us what their goals should be.
Oh, there you go.
Dale, we start every year with asking, what's going to make this year successful?
Good.
Right? What are we working towards? We can sit and look at your numbers and show you pretty pictures, but it doesn't mean anything if we're not working towards something.
Right.
So that's where we start with all new clients that we bring on, but it's also how we start every year. It's how we start personally at SKC. It's how we start, and we're actually entering into, yes, year-end tax planning time, but also into budget season where most of our clients, if they haven't already started thinking about what their 2023 budget is, they certainly will be in the next few weeks and putting together what are we forecasting for revenue? What's our wish list for how we're going to reinvest back into the company, or what do we want to see to help our company increase revenue or increase efficiencies or decrease expenses? What are we going to accomplish next year, and how do we put that into numbers, right? Because it does all eventually flow through to numbers, but the conversation starts with strategy, and the conversation starts with what's going to make this year successful.
And looking too at the historical, precedent of the financial historical. I liked in one of the earlier graphs you had it by month. Every business should really have a good sense of what's been the range in January. They should be thinking right now, what's been the range in January? What's going to make January a good month, and then February a good month, and then March a good month? Because then that opens up all sorts of ideas and opportunities. Wait, well, we can, we haven't really exploited this opportunity the way we could, and maybe it's I get excited about these numbers. I mean, the numbers are actually exciting, and people they seem boring at first, but then you start to see the story. Maybe that's my Wharton MBA in me, but they really are exciting. And I hope is that people on this call can really start to see that numbers will actually tell you the truth and will tell you the story.
We share that enthusiasm, Dale.
I see you guys.
But it's important to note, I think, that a lot of business owners are almost afraid of the numbers, right?
Yeah,
and
really
there's an insecurity around maybe not having full understanding, to Andrea's point before, how important the balance sheet is, but so often we get new clients and they've never even looked at their balance sheet before. And these are the reasons why you need to, hang around with people and hire people and join groups that have that kind of support for you, so you can get comfortable with the numbers, because you just can't run your business on hunch and whatever the balance in the checkbook is. There's a lot of other numbers and certainly a plethora of data within your company that is going to not only provide you with these really important insights, but in many cases, as we've come to start using data and our data analytics team with our clients, it's going to help solve problems for you in a way that you didn't maybe think was possible.
Yeah, That's a great point. Do you have another slide? What's next?
Right. So these are sort of, as I said, our basic key performance indicators, our basic metrics that we look at, with clients on a monthly basis. But then we kind of expand back out into what other data is there that may be non-financial, but is crucial to how you're going to run your business, what decisions you need to make, what's happening on the operations side. And so as we've built out our data analytics practice, we've developed more complex dashboards that can answer questions for clients, or solve problems. And so this is one that we like very much. It's sort of a daily dashboard. Here, it's obviously a slide PDF, but it's really a real live. We use Power BI document that updates daily, and either is on your computer, or you can even get the app on your phone. So, Andrea does this for the SKC dashboards that we have. And we were driving someplace together not that long ago, and she goes, let me look at the I was driving, by the way. And she said, let me look at the dashboard for that. And she picked up her phone and a couple of taps, and she had whatever we were talking about at the time about the firm that she wanted, that information for. And again, these are customizable to what your needs are. Maybe you don't have inventory. So in the top right where it's inventory by location, you may not need that for your business, but, certainly most people care about the revenue number and definitely the total funds collected, because that's cash in the door. So these are things that, our data analytics team can create based on the data in your company. Again, most of this one is still predominantly financial, but you would wake up every morning and before 5 a.m., you could check your cash that came in the door and what it looked like for the year, for the month, and so on.
And how is that populated? Where is the information fed in from?
So it's different for every client.
Right, yeah.
Most of our clients are on QuickBooks Online. So a lot of what we build from the dashboard perspective is built in Power BI and then connects with QuickBooks Online in this example, at least for the cash and the revenue, on the QuickBooks Online financial platform.
So I encourage, anyone on, through the chat or the Q&A, if you have any questions about this stuff. I mean, it really is good stuff. And my hope is that all of you, if you're not doing it, will begin to implement something very similar. So the numbers.
And to your point, Dale, the inventory piece by location on this particular one doesn't come from QuickBooks Online, right? Mm-hmm. So Power BI has the capability to interface with many different software packages. Mm. So, the software that our client uses for inventory specifically is linked to Power BI to help create that part of this dashboard, because again, not everything comes out of QuickBooks Online, and we'll talk about that with a couple other of the dashboards that we have.
Excellent.
I would also encourage those, this is wonderful. Of course, we use this with all of our clients, but even if you wanted to start looking yourself, and you have QuickBooks Online on certain ratios or analytics, QuickBooks Online now has built-in analytics, and you can see some of the, and they've gotten a bit sophisticated in that. So it's not going to show you month over month and have, different components to it. But if you just wanted to peek behind the curtain, if you will, that's a great place to start.
Yeah, the technology has made things so much easier to really attract this. So there's really almost no excuse not to really know your numbers.
Well, and the thing I will say is, as we always say, garbage in, garbage out. So if what's going into, in this example, QuickBooks Online is not correct, or it's not up to date and it's not current, this dashboard is going to be meaningless for the most part, because, it has to be accurate. It has to be up to date. It has to be current. And that's when this all kind of, the well-oiled machine really starts to work, to the best of its capabilities. And sometimes people don't put that level of priority on their bookkeeping work, or, whatever that back office is, to stay current and stay up to date. And that's so important if you're going to really want these daily dashboards.
And that's going to be my question too, because a lot of people say, well, I'm too busy to do this, and I don't have money to hire a bookkeeper, to track this stuff. But, in this day and age, you don't, you can't afford not to. So say something about that too, because I think that's really important.
I mean, it all really depends on the complexity of your business. As Andrea was saying, QuickBooks Online has gotten so advanced compared to what it used to be able to do. Much of the categorizing of expenses and even matching deposit payments with invoices, if you do your invoicing through QuickBooks, is almost completely automated at this point, or has the capability of being automated if you set up the correct rules and things like that. So again, I'm not selling QuickBooks Online. I have no skin in that game, but but it seems to be an inexpensive option that that a lot of people tend to use, and the reality is, to your point, Dale, you can't afford to not have this. Even if you don't want to get as granular as we're talking about with some of these daily dashboards, you mentioned earlier what happened with people not having the appropriate documentation to go for PPP loans. If you weren't able to go back and pull what your salaries were and what your payroll was for a certain period, if you couldn't say what the last quarter's revenue was, those are things that you not only needed to know, but you then had to provide the documentation of. So you can't imagine, and the speed with which we all had to do that when this money was going to get released and it was going to be given away until it was gone. We can plan for things now, saying, all right, well, in a year you might want to go for a loan or a mortgage, so let's start cleaning these things up. I mean, people that didn't have their house in order at the time of the PPP loans missed out.
Yep, they missed out big time, really big time on grants. Things that became grants, not even loans. So again, getting more to the basics. So quarterly filing. The small businesses. Does every small business have to file quarterly their taxes, or do you have to generate more money, more revenue? I've gotten that question over the years. What's the story there?
So so there should always be quarterly payments being made if there's profits in the business, right? Okay. So if you run a business that makes money and you pay tax at the end of the year on those proceeds, that payment needs to be made quarterly. So 4 quarters out of the year. And if you don't do that, you are subject to interest and penalties for not making those payments on time. I always compare it for clients to a W-2 employee, right? So the IRS loves the W-2 employees because they get paid every 2 weeks and their tax gets remitted every 2 weeks. So the IRS feels very good about that constant cash flow. And they expect the same essentially from business owners who may not be on a W-2 to get that same quarterly stream of revenue from them paying their taxes.
Okay. But if you're not profitable, you don't have to, it's not as required, or?
Well, assuming if you're not profitable, I assume then you have no tax due.
Right. Yeah, that your expenses outweigh your income.
Correct.
Small
then the
business.
conversation's a little different.
Yes.
Well, good. All right. What's next?
So we have a couple of, I'll keep talking about some of these financial related dashboards, and then we can have a conversation about some of the non-financial data that we've created into dashboards for clients to answer their questions. And, this kind of takes a deeper dive. Again, it's customizable for what each client wants to look at, but this specific one is revenue driven, and it's broken down by customers and by products. So the client is, looking not only at their revenue by month, but they're looking at their revenue by their different profit categories that they have. We certainly have a goal down, at the growth percentage down at the bottom that we're kind of keeping an eye on. But again, in the real world, these aren't frozen PDFs. They're clickable dashboards in Power BI that can allow a client to go in and filter. So you'll see at the top, it says sales rep, and then there's sort of that gray box that says all. Well, as a live dashboard, you're able to go in, click on that drop-down box and select, Sally Jones as the rep. And then you will get all of Sally Jones's top 10 customers, all of her revenue by month as the sales rep, and the top 10 products that she sold.
Wow, that's great. The sophistication of this stuff is such that you're getting, stuff that Fortune 500 companies get, with technology. That's pretty cool. I mean, one of the things, and just a personal story, one of the small business clients I had was in retail, and they had 6 salespeople, and none of the salespeople knew what they did. So we set up a monthly sales meeting where everybody saw how the performance in that competition generated an extra $1 million out of a $9 million business. And so knowing this stuff and being aware of data pays dividends in the long run and can generate additional revenue. So this is great.
And that's really what we wanted to do when we created the data analytics service line, is to really give small business owners that same access to their data and the analysis that the big companies pay, hundreds of thousands of dollars to either an in-house team or to their, outsourced consulting firm, because this data, it's in every business. And what we wanted to be able to bring to business owners of our, our smaller business clients is that capability to do this analysis and really have that additional level of success in running their business, because all of this data is at their fingertips. We just compute it in a digestible form for them that's meaningful. And again, you can change the dates in the upper right-hand corner to modify it. And I don't know, Andrea, if you want to add anything on this one, but
well, it's so many businesses will look at this and use it in a variety of different ways. We're looking at it right now purely from a revenue perspective. But if we looked at Sally Jones as a sales rep, is she hitting her sales goals? Does she potentially need additional, training? What is Sally selling compared to Jim? There are so many, and which of those products, which is on another slide, which of those products is more profitable?
Mhm.
So we use this information to help businesses get from where they are to where they want to be.
Mhm.
And it's much easier for them to make decisions when they can go into the Power BI and look and slice and dice their data that may be in many different areas, and manipulate it, maneuver it so they see it in different ways. Well, what if I look at it in this way? And what if I add? And I can almost guarantee that if you do that drop down, you can probably click on 3 different salespeople that make up one region, right? So if you say, I want to look at my New York sales team, then we click all the
Right.
New York salespeople and we see what their revenue is. And so it really is, it's beyond just looking at what's our number this month. And it's truly a tool to be able to help employees grow, help your business grow, provide, order more products or provide services and products that are most profitable or most meaningful to your clients. It really is, it's a tool for multiple different components. It's not just, where's my revenue?
Well, you shared you folks shared some amazing numbers. Data-driven organizations are 23 times more likely to acquire customers. That's pretty cool. Businesses that use data increase their profits by 8%. And these businesses are growing at a rate of 30%. That's pretty good reason to be doing this.
I mean, and there's so many different ways, Dale, that those statistics come to be true, because you're improving things on the operations side. This one again is really geared towards the sales rep side, but this is the last one that we have, which is again the gross profit, and some of the other ones that we've talked about earlier today. You're not only being transparent from with the sales folks on the ones that we just showed, and getting them to up their game or understand what their colleagues are doing. And it doesn't have to be in a competitive way, but it's just, wow, maybe you sell the most profitable product, you sell the most profitable product. Well, how are you doing that? And so it becomes then in those monthly sales meetings that you talked about, the teaching moment, right? So Sally Jones can share with everybody how it is that she's been so successful in selling the most profitable product. But absent having this kind of information and having this data, to share, it's a secret to everybody, and you're trying to run your business and you're doing the best that you can day to day, but you have to make the time to make sure the data is good and to create these dashboards that are meaningful to you. And I'll tell you one that we did at SKC that's non-financial, that's been impactful to the decisions that we make and help us in the long term, be more profitable, because ours is around marketing. So we created a marketing dashboard that monitors our campaigns that we do on social media and a few other things that we've done on the marketing side, because everybody ultimately wants to know, well, what's our ROI on our marketing dollars, right? So we created internally a dashboard for our marketing department to understand what were the profitable campaigns, or what were the campaigns that, drove the most traffic to the website, or what were the blog posts that had the most, clicks on them, or likes or upvotes, or all of that. And it was non-financial data. So Power BI has the capability to pull things off of our website, off of, Constant Contact, off of SurveyMonkey, off of all of these different platforms, to give us a true picture of how successful were these various different investments that we made on the marketing side. And so you make different decisions going forward when you know what the results were of things that you tried. And that, I think, again, so many ways to contribute to the success of your business through data. You just have to start the conversation somewhere.
Absolutely. I mean, that's really powerful stuff. I mean, so much of business has been fly by the seat of your pants, just kind of, well, I feel like we make this product. I feel like this is our best selling product. It's my favorite, so it must be our best selling product. And so, it really is amazing. And now technology has, I know in years past, you didn't have time to pull out paper and calculate the numbers, but now the dashboard that you're providing and others gives us an opportunity to really get data in a really easy way. But the biggest problem, which is why we're doing this, is the fear to start. I think sometimes people will look at that and say, oh, I just can't do it. I just don't, it's going to take too long. But the people I've seen, once they start to realize this is actually kind of fun. This is actually working these numbers. And I knew my business and I said, wow, February should be our big month. We're not taking advantage of February. So let's do something in February. So that's part of my enthusiasm. I want other people to have enthusiasm. Just give it a shot. Just try it. And when you know more about your business, it becomes that much more fun, because there are all sorts of other things you need to worry about, staff and other things, but this is something you can actually control, getting data.
And it's so fun when, Andrea sat in on a lot of the initial meetings with clients to create these dashboards, and, our amazing data analytics team here that's headed up by Ryan, they sit down and they understand what the client's looking for. And then we build the first dashboard. And then we go back and they meet with the client, and then the client looks at it and they say, wow, what else can you do? Right, Andrea?
Right.
Exactly.
And
they always want more.
They do. And so, we want to, of course, we go through sometimes 2, 3, 4 different iterations of the dashboard until the client really gets what they're wanting out of it and what they're looking for. And usually it always ends up with adding a little bit more, or adding another page, or can we look at this, or how can I see this? Because once they see their own company data on it and it becomes meaningful to them, and they can start to think about how that's going to impact how they run their business, they always do come back and say, can we get a little bit more? Can we get a little bit more?
And every time they have a challenge or an unknown, now that they've had a little taste of data, or may have a dashboard, then they can come back and say, hey, this is the challenge I'm having. Is there a way we can find a solution with using all of our data? And then that's when we rework a new page or what have you. But it's, now they're thinking about, instead of I'm having this challenge and I don't really know what to do, so I'm not going to deal with it because, well, sometimes that's easier. Now they're thinking, how can I use the data we have to, is there a possibility that it'll help? So it's certainly beneficial and can be quite addicting.
You had provided 5 great questions for the data to solve problems. I don't know if you want me to share the questions or if you want to share the questions, but I think those would be really, really important for our audience. You want me to share them?
Sure.
Yeah. So
Absolutely.
first, what problem are you trying to solve? The idea is, so what are you trying to solve? What insights do you need to answer? I love these SKC questions. And so once you talk about the problems, you talk about the insights, what data sources are needed to find that information? Once you get those 3 things, then you evaluate the data and say, what do the numbers show? And then what do I do once I figure that out? I like the way that's laid out so simply. And I hope all of you ask yourselves those questions. What problem do I need to solve? And what data do I need? And what action does the data tell me I need to do?
And Dale, that's why we created sort of those 5 step through questions, because of what you said earlier, that fear of getting started, and the business owner just looks at it like this insurmountable mountain to try to navigate and overcome. And we break it down into those easily digestible questions that all they have to do is sit down and have a conversation with us. And then our amazing team on the back end, builds round 1, round 2, round 3, or however many it takes until they get, ultimately what they're looking for.
And you also add, one of the things we haven't talked about today, but is this idea of tax planning. Just by starting earlier with that, it's, everyone is, well, not everybody, most people are reactive. Okay, all right, I got to do the taxes. Let me see what happened this past year. And you can save so much money by being very strategic about it. And so by working with SKC early on, you can begin to really lay out a tax plan, and a revenue plan and a marketing plan that makes your business a lot easier to do. And so I think the message is start early, know what's going on in your business. And you guys, you've been doing this. And what I like is that, we've had you on, Sue, once or twice a year, and you're evolving and you're coming up with new products and new stuff. I like that. You're not sitting there saying, well, we were successful 3 years ago, we're doing the same thing today. You really are. And it seems to be really customer based. You're coming up with things that your customer said, oh, I wish I had this, or I wish I had that. And so now, do you have an IT department that really helps to really pull this together? Yeah,
We've used the data, our data team.
Yeah, the data team. Okay, good. Excellent. Anything else? Is we're almost at the end of time. If they want to reach out to you, what's your web address and what number should they call?
So we could probably put it in the chat. It's skcandco.com is our website address. And Andrea, I don't know if you want to put our emails or our phone number in the chat, since I can see you doing it already. But our office number is 973-335-1112.
I'm sorry, I think that's only going to the panelists. Dale, can you share?
Oh, okay. Let me send it. I'll send it off.
Hosts and panelists. Yes. Sorry.
No,
I don't have a drop down to be able to send it.
Again, that's another
Change of Zoom.
The change of Zoom. So
We can figure out data. I'm not sure about Zoom.
Yeah, Zoom. Well, I don't know that Zoom can figure itself out, it seems, but well, this is great. And any questions?
And we can certainly follow up and send out all of this detail. I'm sure Karen Donaway on our team will follow up and send out our contact information and our website to everybody that's registered.
Yeah.
So we will certainly send a follow up. Have no fear.
Yeah, and Sue is great at helping with that too.
Exactly. Yep.
So this is, I just sent it to
Thanks,
everybody.
Thanks, Dale.
So we
wonderful.
got that. So, well, good. And any, I know you're busy, this is the time that, so people, given your schedule, say I have a small business and, I really need some help with taxes and so on. When should we start talking to you? Because obviously, April 14th is not a good time. So, are people starting? You have to wait till the end of the year, right? You got to get the final numbers, but is it January, or are the smart businesses scheduling time in January, or what do you recommend?
Well, our model is that they meet with us monthly all throughout the year.
Okay. Good.
So as Andrea said a little bit earlier, this is really the time that we're doing year-end tax planning. This is
Mm.
probably the latest in the year that,
I
would
start in
suggest-
August.
yeah,
Wow.
that
Wow.
I would suggest people, make these kind of decisions. And you really, if you want to have an impact still in 2022 from a tax perspective, your numbers need to be up to date, through September at the most. And you need to be having those conversations with your advisors now to, take action that is still going to be able to affect the 2022 year.
Wonderful. Well, Sarah, Andrea, and the SKC team, thank you so much. This is great. I always learn a lot, and I really enjoy talking to you. Susan and Maura and the Rothman staff, just appreciate you so much. And any questions, reach out to them. So I want to thank you all for coming to this session. I hope you all learned something, and we'll use it to make some more money. So take care. Have a great
Thanks
weekend.
for having
everyone.
us, Dale.
Yes.
Thanks,
Take
Dale,
care.
so much. Take
Have a
care,
good one.
everyone.
Bye-bye.